Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is the earnings special edition where our focus is going to be on Asian Paints. The company has reported a drop in its consolidated net profit in Q1. It's declined by about 25% year on year to 1187 crores. The revenues have also decreased by about 2% on a year on year basis to 8970 crores. It's on an operational basis that the pressure has been felt a little more. EBITDA has seen a decline of over 20% amounting to 1694 odd crore rupees. The margins have also seen a contraction from 23.1% to about 18.9%, and this is versus last year as we have seen. Now to detail for us what were the key pressure points that the company has faced in this quarter and what's the outlook going forward. I'm now joined by the top management of the company. Mr. Amit Syngle joins in. He's the MD and the CEO of Asian Paints. Warm welcome to you, sir, and thank you so much for speaking to us on Business Today. Could you help us pin down some of the key factors that have led to the pressure on both the bottom line as well as the margins this time around, sir? And also, is this going to be the maximum pressure that we have felt because of the ongoing reasons, and there could be a reversal in sight? What would your view be?
So overall, we've seen tough demand conditions in Q1, especially the months of April and May were definitely tougher in terms of what we could see. The impact of general elections, the heat waves kind of really affected the overall demand. However, the month of June was much better in terms of what we saw. I think the B2B business did extremely well in the month of June. Overall, we saw uptick with respect to the rural markets as well. Overall, what came in the industrial demand was also good. So I think that augured well in terms of for us to at least deliver a 7% volume growth for Q1. The value has been down, and the fact that the product mix did not deliver to our expectations. So overall, the larger range of economy products did well, but I think the premium and luxury products overall did not go as per our overall expectations. So I think given the fact that there was a depressed value and overall in terms of that we also saw inflation in during the quarter. I think it led to some contraction of the margins in terms of what we are seeing for Q1. As we go ahead, especially in Q2, we are seeing that the demand is definitely much better in July as we are seeing overall vis-a-vis Q1. I think the rural market trends are also showing that the demand is kind of picking up. The good monsoons which are progressing overall are indicative of a good market sentiment and a good agrarian economy, which kind of people would see overall to that extent. And we also have a good, overall long festive season, which is in the offing to
Yes.
that extent. So I think all these augurs for definitely a good quarter overall, a demand coming back. And definitely, I think from even a margin perspective, we would like to be kind of going ahead in the band of 18 to 20 and maintain that band going forward from a PBTIT margins. So definitely, we do see definitely some reversal happening in terms of the overall performance for the Q2 as we kind of go forward.
Okay, a reversal in sight is definitely good news. On the margins, that's your last points, I wanted you to expound a little bit for us. So you did say you'll be maintaining that 18 to 20% band. But with respect to the indication on price hikes that you've already done, could you detail for us the kind of price hikes that would be offering in Q2 and of course for the rest of the fiscal year as well? And will that give you an extra lever for probably looking at breaking this band on the upward side? Or do you think the risks on the downside are more, sir?
So overall, the inflation in Q1 has been about 1.8%. We've already taken a 1% price hike in July. We further see that Q2 will the inflation is expected to be about another 1.5% plus. And given the fact that if this inflation is realistic, then we would kind of exhort to taking further price increases, which would kind of come in. Now, as we see, I think largely the price increases will definitely help us in terms of overall kind of balancing the inflation the way it is going. We would look at obviously a lot of other measures with respect to conserving our cost and definitely getting some cost efficiencies with respect to our procurement formulation efficiencies overall. So the idea is that basically as a combination of price increases, combination of cost efficiencies, and also the focus in terms of increasing the product mix. I think the margins is something which we would definitely kind of maintain in the upper side of the band as we kind of go forward to that extent. And we need to look at some balancing in terms of what we will have to do, because certain expenditures in terms of what we are looking at are slightly medium to long term, whether it is in the area of employees or whether it is from the point of view of advertising and marketing expenses. So I think it is good to say that I think we should kind of really stay within the band at least and ensure that we get in terms of a higher side of the band as we kind of go ahead.
Okay. So I also want you to just respond to, a lot of these brokerage houses that have come out with the reports after earnings, and where they are consistently pointing out that perhaps the muted performance could also be with respect to, increasing competition, especially with newer entrants like Birla Corpus now, Opus also now taking place. And now, do you think the price hikes that you will be doing will be also to tame any kind of competitive, aggressiveness that we will see on ground now, sir?
See, overall, see, the market always gets the impression that whenever the performance is tougher, I think it's because of competition. I think we must give credence to the overall environment. The environment has been not very, very conducive to overall demand. We feel that the entire industry has overall degrown in terms of the environment, in terms of what we have seen, and that is something which is what we see in the market. Definitely, that the conditions for the industry have been tough. I do not think that any of the new players have made any this kind of impact that they could kind of really impact the overall growth rates for Asian Paints or any of the other bigger players in the market to that extent, because the overall impact of the newer players, even if we get all of them together, would not be more than 1.5 to 2% of the total kind of industry contribution in terms of what is there to that extent. And that is why we feel that I think it is still very early stages to kind of really start saying that it is the competition which has started affecting the industry overall to that extent. I think it will take some time before we are able to kind of reach that of a conclusion. And I think it is straight mathematics which indicate that if the total new competition is going to be just 1.5 2% of the total kind of market, it will really not affect the dynamics in terms of the larger industry.
Okay, so let's understand a bit more on both the volume growth as well as value growth. You did point out in your previous answer, vis-a-vis the industry, how do you expect the volume to grow for the rest of the fiscal year? And also, how do you see the gap between both value and volume for the rest of FY25, sir?
So first of all, I think it's good to speak about quarter two. I think that's very, very important in terms of what we want to focus and get our business there. As I said, we are definitely looking at a revival in terms of the demand conditions, whether it is from the point of view of rural, institutional, or even from the point of view of overall industrial. So as we look at this, we are definitely, as I said, looking at the double-digit volume growth to that extent. And we are predicting that with our focus on value and the way overall kind of initiatives we are taking, there should be a 5 to 6% kind of a difference between the volume and the value in terms of how we look at overall quarter two going to that extent. And given the fact that there is a festive season ahead, this is something, there is some bit of confidence which is there in terms of how the market would kind of behave and how the demand conditions would augur out to that. And I think our entire thing is that we should be kind of really growing a little bit ahead of the industry growth. And that is what is the endeavor from both the volume and the value in terms of what we would like to kind of really undertake.
Okay, fair point, sir. We'll also focus on a bit of how the international business versus domestic business will be shaping up, as well as your segmental performance now. The international business did see, the sales decrease by about 2.3% to 679 odd crore rupees. Could you help us understand how the key markets internationally have performed and what would be the outlook there?
So the international markets have not done well in the quarter one overall, especially when we see a lot of markets in Asia, which is Nepal and Bangladesh have not done well. Similarly, I think the markets of Egypt and Middle East have not done well to our expectation. We have seen some currency devaluation which has happened in Egypt and Bangladesh, which have also affected the overall growths from a point of view of INRs to that extent. In constant currency terms, the overall international business is at about almost approximately 2% kind of overall in terms of what we are seeing. However, as we kind of go ahead, I think we are looking forward to markets like Middle East and Egypt coming back. I think markets in Nepal are continuing to be tough because the economic conditions are not really kind of improving. Plus, the political environment is also not looking very stable to that extent as of now. So I think in some of the countries, some of the disturbances will continue, but we are definitely seeing that we are able to kind of look at single digit growths as far as possibly value and volumes are concerned.
Okay. Just last two questions, sir. One on the segmental performance. Home decor segment for you has been a pain point, especially when it comes to the bath segment. What would your strategy be from here on to revive this space? And where would you see, the growth driving factor coming in from among sectors going forward for the rest of the year, including your focus on product mix? You did highlight that the product mix was not very favorable for you in Q1. How do you look at that now from Q2 onwards?
So overall, from a point of view of home decor, we are definitely seeing a revival both from a point of view of bath as well as kitchen. Bath has grown at about 10% in this quarter, and the whole area of kitchen segment has also grown at about 5 to 6%. So, including the categories of lighting, which is white teak and fresh sheet, to that extent, both have grown in double-digit numbers overall to that extent. And therefore, we are seeing that the overall home decor segment is definitely on an uptick in terms of what we are seeing. And we are putting a lot of focus in terms of really driving this category because we believe that owning up the homes really also gives us a uptick with respect to our core business because the Har Ghar story comes alive as
Yes.
we look at the whole initiative in terms of the overall home decor to that extent. So I think we are pretty buoyant about it. We are putting more and more of our beautiful home stores across the country. We already have
Yes.
about 60 stores. We have another 7, 8 stores which are in the offing in quarter 2, which will kind of come up. And we feel that the BH stores coming is definitely boosting all the categories in terms of from the point of view of the demand perspective.
Okay, fair point. In the end, we are just 3 sessions away from the union budget, sir. So I have to ask you, is there a long wish list from the upcoming budget and the finance minister? This, is going to be the first of the budget within the coalition setup of the government. So are you really looking at some things which will change from the previous budgets?
So definitely, I think we are looking at acceleration in the whole development story of the government. The whole infrastructure story is something which we are looking that the government continues to kind of give more allocation and more budgets in terms of that area, so that that is something which will continue to skew up the overall growth of the country and which will affect all the industries. The second area is that we would definitely look at government kind of giving more impetus to the rural economy in terms of giving more shops and focusing on the agrarian economy to that extent. I think there's a long need to kind of really have the rural sector demand coming up. I think it really affects a lot of industries in terms of really going ahead and boosting also of our overall growths as we see. And the third area, I think, is from the really kind of improving the more disposable income at the hands of the middle class. I think more tax shops there in terms of really getting more money in the hands would definitely give impetus to the consumption story going ahead as we see it. So I think these are some of the wish lists in terms of what we have, and I'm sure the government is going to come out very strongly with a progressive budget as we see forward.
Okay, Progressive budget expectation at that. Thank you so much, Mr. Syngle, for being with us on this show. I wish you all the very best for the upcoming quarters, revival that is in sight, and better demand conditions that you're already looking at from June onwards. Probably Q2 will be much better than Q1, as well as the hopes are building on, and of course with some of the measures that you're taking, which you've mentioned in your answers. Thank you so much. I appreciate your time always on Business Today Television.
Thank you so much.
Thank you, sir. With that, viewers, we wrap up this very special conversation with the top management of Asian Paints. The earnings for Q1 has definitely missed estimates. The reasons have been highlighted, but the good part is that the management is already looking at some signs of a revival in demand that's already taking place June onwards and in July as well. So therefore, there is a higher hope that the earnings will improve from here on too. Many thanks for being with us on this special edition, but do stay tuned as there is a lot more to take in right ahead of the union budget that will continue to take place on Business Today.